Hello everyone, this is Delta Trades and this is Concept Review. In this series I'm going to be going over notes that I've taken on a certain trading concept. I'm going to explain it to you the best way I can. I'm going to give tips and tricks that I have learned from trading this. The first concept we will be reviewing is daily profiles. The 4 types of daily profiles, how to trade them, how to use them, and how to spot them in the markets. Okay, so we have 4 daily profiles to go over. The first one is London reversal, New York continuation. So this daily profile is a expansion candle, and what that means is that London will say start down here, and then it'll come down, and it will hit a higher time frame key level, such as say a 4-hour, a daily fair value gap, or a really strong liquidity pool, and then it will start to reverse up, making a new high, and then New York opens here, right here. This is where New York time opens. This is at 9:30, and this right here is London at around maybe 3 a.m. So when New York opens, we can predict it to continue upwards and keep going if there is no higher time frame objectives over here. If there's no 4-hour fair value gap, if there's no major liquidity, if there's nothing to reject, we can expect price to just keep on pumping upwards. Now, to frame an entry off of a day like this, you would hope for maybe some sort of small retrace into, say, a 15-minute to then get your entry model and then enter here with your stop loss down here. This could be a potential entry, but you don't want to try to target London lows off of, say, a short, because the higher time frame key level has already been hit in London. Now, a very important confirmation for this model is if London created a major CISD. So if we have, say, a 30-minute downwards candle here, and then we have some just price, and then once we hit this key level down here, once price comes up, if we are able to get a 30-minute, which closes above the body of this candle, that is a CISD, a change in the state of delivery. Now, this is a very strong confirmation that we want to see price continue higher through New York session. And by the end of the day, you will see that the daily candle looks something like this. It is just a major expansion candle. This is bullish. You'll see a major expansion candle with an open down here during London, coming down, making the low, hitting a key level, coming all the way up, and then closing off for the day around here. This is London, and this is New York. Oh, okay. Well, my cat just came to make a cameo. This is Titan. Say hi, kitty. Okay, anyways, the second daily profile is called the New York reversal. The New York reversal is when we see London sort of slowly move towards a higher time frame key level. Let's say we have something major down here. We want to see London session slowly come down to it and not quite make it. And then once New York session opens, we want to see a swift move towards it, taking it out. And then we want to get our entry model, possibly even get a CISD here, would be extra confirmation on the higher time frame. And if you can get an entry model here, this is where you'd want to take longs. So the way we expect the candle to look is a bullish candle. This is the open. We expect a long wick down because this is where London opened here, moved around. This is where we came down a lot. And then we wait until New York to hit this level, and we expect a very strong reaction to the upside. This is London, and this is New York right here. The third daily profile is called the New York manipulation. Now, this daily profile is quite similar to the New York reversal, but it has very important key differences. Once again, it is London manipulating, not hitting anything. At 8:30, we expect to see a large move to the upside, hitting a higher time frame key level. And then we expect to see a reaction throughout the day, bringing us much lower in New York. So, the major differences between the New York manipulation and the New York reversal that you have to understand is that the New York manipulation is following the major higher time frame trend. So you'll see something like this, and then we will see liquidity being taken, and then we will see a continuation of the trend, of this upwards trend. But with the New York reversal, we can expect to see a strong higher time frame trend, and then a reversal from it. So, the key difference is a New York reversal is where the New York session hits a higher time frame key level, takes liquidity, and reverses direction against the London session's direction. While a New York manipulation also starts with a liquidity grab, but instead of completely reversing, it aligns with the higher time frame bias and it continues trending after the manipulation. So the key difference is the New York reversal is about rejecting a key level and reversing, but the New York manipulation is about grabbing liquidity to continue and to fuel a continuation move. The New York reversal will go against the London session move, but the New York manipulation will continue with the higher time frame trend. The New York reversal will usually dominate the session with a very sharp move, while the New York manipulation will create a fake out early and then trend in this direction. The fourth and final daily profile is called Seek and Destroy, not like Search and Destroy on Call of Duty. This one is Seek and Destroy, and you want to avoid this session. Now the reason you want to avoid it is because this is the lowest probability daily profile that you can trade, and it's very, very hard to figure out what to do, figure out when to take trades, figure out when liquidity is not just being generated and when a reversal is going to happen. It's just very hard to trade, and it's very low probability, so I would avoid staying away from it. So what causes Seek and Destroy conditions is when Asia, London, and New York, they can't expand in either direction. They don't want to move upwards or downwards. They just want to sit in this zone. Now what causes this is when we are range bound between two key levels and we can't hit either, or when we're waiting for higher time frame news. Let's say tomorrow is CPI, we can expect major moves. Now what we'll usually see is what's called an indecision candle, where price opens and closes at around the same height and has very long wicks on either side. So usually we will see some form of liquidity sweep up here and up here. Usually the absolute high of day will be a pretty obvious liquidity sweep, and the low of day will also be the same thing. You can see a liquidity sweep here, we see a liquidity sweep here. If you do want to trade this, the way to do it is to treat Asia session as a sort of magnet, where London and New York are going to go up and down and up and down, but they always seem to be pulled in by Asia session, as if it's some sort of magnet here. Here, we have a premium and discount range of this area. This is the premium, and this is the discount. So you want to look for trades that are outside of the range inwards. You don't want to look for an expansion. You want to find something to enter here, and you want to target the discount of the range. And once again, notice how Asia session is a sort of magnet where it pulls price in and it escapes out, and then it pulls price in and it escapes out. Another thing that causes Seek and Destroy conditions is when London expands. Now what that means is when Asia's low, call this Asia, Asia's low never gets swept, and we see London just completely run away. This is London, and we see it just pump. Let's say on NQ, let's say this is 200 to 300 points. When we see this, the most common thing that will happen is New York will completely accumulate. When London takes Asia's high and runs away with it and doesn't take the low and pumps very hard, there's a extremely low probability that we'll see a clean, strong movement in either direction for New York session. Once again, the best thing to do is to just avoid days like this at all costs. And that is going to wrap up the first episode of the Trading Concepts Recap. I have a lot of these notes. I have just pages and pages of these. I think next episode we're going to do internal range liquidity versus external range liquidity. If you enjoyed this, please make sure to leave a like on the video and subscribe. And also check the description and join my Discord server. If you ever want to talk to me, if you have any questions, I'll always be there to answer you. Thank you, and I'll see you in the next video.